We're going to look at the hotel acquisition model from Tilt Analytics. First we will look at the output sheets, then the input sheet. My goal here in building the tool was to have output sheets that are professional and convey a strong message for raising capital. And on the input side, I wanted things organized. The first sheet in the output sheets is the cover page. This would be your logo here instead of mine. You have some information about the property here. The table of contents is fully hyperlinked. I can go to a sheet by clicking. There's on the deal summary, we see uses and sources, acquisition loan, exit, IRR, operating cash flows, non-operating cash flow. I'm also happy to customize a deal summary for you based on the things that you want to see in your summary. There's also a graphical dashboard. We have an investor return summary here showing LP cash flows in each year, returns, some information on the agreement, and so forth. We also have a sheet for a hypothetical investment. What if you're at the table with a potential LP, but it's not yet clear how much she might put into the project? You can input a figure here and see what the returns would look like. We also have LP cash flow oriented this way, where you have preferred return, return to capital distributions, you got the equity contributions. You can also see the information quarterly over here if you like. Here's a chart of the cumulative position of the LP investor. This cash summary is great. It's all of your cash in over all of your cash out for the entire project. And here we see the information presented annually, but we can go to the right and see it presented quarterly, and we can go to the right and see all the cash flows monthly if you like. We also have uses and sources laid out the same way. You can see annual and then monthly figures. The uses and sources here could consist of loans, grants, mezz equity, exit proceeds, NOI applied to the capital need, and so forth. We have a summary analysis. The point here is that the project itself must inherently generate enough cash to provide adequate profit to the suppliers of debt and equity capital. And so this sheet is a breakdown of that. We need a nice hotel P&L, a summary of the revenues and expenses. We see each of the categories in the P&L. We also see expense ratios, yield on acquisition cost, and so forth. Cash flow from operations, non-operating cash flow. Here again, we've got annual and monthly. Debt amortization, you can have an acquisition loan and 2 refinance loans. There's details on the equity agreement. More details on the equity agreement. You can have individual LPs, individual GPs, and you can see the returns to each. This here, I don't have any specific names plugged in, so everything is under other, and that's where we see the totals. We can also see a sheet breaking down the calculations for the waterfall. We have a break-even chart. This chart's quite useful. It's your NOI over your debt service. It's an important thing to watch. We have total cash flows in the project, LP-GP return splits, an NPV table, and a table showing your mezz equity returns. There's also a sensitivity table here for the hotel showing a two-way matrix on what if your acquisition price is different than right now what you think it will be, and what if your exit cap rate is different than what you presume in the model. And so you can see the range of outcomes based on those two things. And then lastly, we have GP cash flow, both in tabular form and a chart. And that brings us to the input sheet. All of the inputs are on one page, all of the inputs are categorized, and all of the categories are hyperlinked here in the table of contents for the sheet. And so you can enter in the property information, the year of the acquisition cost, how many keys. If you want a renovation, you can tell the model when the renovation starts, how long it lasts, how much it costs, and you can even tell the model the impact on operations. How much does it decrease your revenues during the renovation period, and how much does it decrease your operating expenses during the renovation period. But once we've done that, we're into inputting the hotel operations. Here, The model is very smart, tries to make your life easy in terms of doing forecasting. The default of the tool will be to assume seasonality that is tied to the number of days in the month, but you can also override that if you happen to have a beachfront summertime property and you could more heavily weight the summer months, for example. The inputs are done in segments, so here we have the hotel departmental revenue. At the top of each of these sections is a summarized P&L. So you see the revenues in black, of course, the expenses in red. And so you can monitor the impact of your inputs as you go along. And so here we have the OCC in each year. You can input ADR in two different ways. I might start off entering in specific dollars per room in years 1 and 2, and then after that I enter in, say, a 6% growth rate from then on. The other departmental revenues, we can input the department name, and we have drop-down categories to make things easier. And so you see here that you can select percent growth on previous year actual, same percent of rooms as based on the previous year figure, dollars per occupied room, dollars per available room, percent of rooms revenue, and a straight dollar input. And so, for example, I could plug in that last year was 3.4 million in F&B revenue. Let's do a 4% growth on that each year. Alternatively, I could say let's do dollars per occupied room. Take this down, and you can take it out that way. Here you might have same percent of rooms revenue as the previous year actual. So if the previous year was 100 grand, the model will look at what the previous year revenue or rooms revenue of 4.8 million and take the same percentage of that each year based on your projections. You see the results of your inputs down below. And so the next section we're at is the departmental expense. You see you can do percent of departmental revenue. You go on to the undistributed expenses. Here too we see a variety. Percent growth on previous year. The dollar input option here where you can actually just plug in whatever dollar amount you think it will be in each year. Percent of revenue and so forth. And the remaining sections for fixed expenses and other income, fees and reserves work similarly. And once you've done that, you're done with the operations. You can look at the summary of the revenues and expenses in each year. You can see your expense ratio and so forth. Tell the model when you want to exit the property, what year, what month. Do you want to value it based on a cap rate, or do you want to just plug in a dollar input figure? I'm going to do a forward 12-month NOI with a 7% cap. That's 14 times earnings. Get the valuation. The model would allow you to take over an existing loan on the property if that's relevant. On the acquisition, you can tell the model what percent LTC on the acquisition or LTV, and you can, of course, enter in the pertinent information for interest rates and so forth. The equity splits on the contributions between the LP and the GP. You can have GP fees, acquisition fee, asset management fee, disposition fee, for example. Your refinance section is quite smart. Shows you how much money you need to pay off the acquisition loan. It will highlight for you if you haven't, if your loan won't cover it. It also shows you what your LTV need is to cover the loan after origination fees. It also shows you how high you can go without violating a DSCR covenant. NOI versus debt service in each year. You can see the DSCR figure for each year. And once you've come this far, you're almost done. You now just tell the model about the agreement you have between the LP and the GP, preferred return, LP getting paid back or first or getting paid back simultaneously. You can do fixed distribution splits on everything after return of capital, or I could select, no, let's do a waterfall. This section goes away, this section comes alive, and you can do LP hurdles. And then lastly, you can enter in specific LP names if you like, and how much they're going to put in. and the model will show returns for each individual based on that. And so when you've come that far, you're at the end, and I'm happy to talk more about the model with you. You can send me an email at tiltanalytics@gmail.com. Of course, the website is tiltanalytics.com, and thanks for watching.